Good one, students. Today we are going to know about the money market, the concept which is related to the money market. So, what is the money market in India? What is the structure and what are the sub markets of the organized sector? Role of money market, and now it is the underdeveloped nature of money market, and what are the defects of the Indian money market, and how we are going to improve, and what are the measures we have to take to improve the money market in India. So these are the concepts we are going to learn as a part of the unit number 3. So first of all, the financial market is going to divide into the two parts, or we can classify the financial market into the two aspects. One is the money market and second one is the capital market. So money market versus capital market. Money market. It deals with the lending as well as the borrowing for short-term period, whereas capital market deal with the issuing and trading of securities for the long-term period. Here risk factor is low and here the risk factor is comparatively high. So what is the meaning comparatively high? Compared to the money market, the risk factor of the capital market is high. It refers to the short-term period, maybe within the year, and it refers to the long-term period, more than 1 year. And the returns on investment or a return on investment ROI is very less. Why? Because the risk factor is low. Coming to the capital market, the risk factor is very high. At the same time, the return on investment also comparatively high. So, what is the role of the money market in India? It is going to provide financing to the trade or industries, and it gives the self-sufficiency of the banks, and it helps to government effective implementation of monetary policy as well as the economic growth of the country. So the structure of Indian money market, the Indian money market classified into two sectors. One is the organized sector and second one is the unorganized sector. Again, unorganized sector classified into the indigenous bankers as well as money lenders. But whereas coming to the organized sector, it is going to classify it as Reserve Bank of India, commercial banks, post office saving banks, non-banking companies, NBFCs, that means cooperative banks. Again, commercial banks classified scheduled commercial banks, non-scheduled commercial banks, comes under foreign banks, regional rural banks, whereas the scheduled commercial bank comes under the public sector banks and Indian banks. Like here again, State Bank Group, nationalized banks. So this is the structure of Indian money market. Basically classified into two types. One is organized sector, second one is the unorganized sector. So what are the things comes under organized sector? It is a well-regulated sector of money market. It is subject to strict supervision and control of RBI, and everything is well organized as well as in systematic manner. It includes RBI, commercial banks, post office savings banks, non-banking institutions, as well as cooperative banks. I think all the people we know that about the Reserve Bank of India. It going to issue the bank of note issue, acts as banker, agent, advisor to the government, lender of the last resort, development of banking system, and it provides the training facilities, proper internet structures. So these are the commercial banks, scheduled banks, non-scheduled banks. Comes under non-scheduled banks, foreign banks, RRBs. Scheduled banks, public sector banks, Indian banks, State Bank Group, and non-national banks. It acts with deposits and it provides the loans. It promotes the check system, locker facilities, regional developments, development of agriculture and related activities, and promotion of trade and industry. So central bank's information comes under the second schedule of RBI and have to fulfill the three conditions. It has paid up capital and reserves of at least rupees 5 lakhs. It ensures the RBI that its operations are not detrimental to the interest of the depositors. It is a corporation or a cooperative society and not a partnership or a single owner fund. They carry out normal business of the banking related activities. This is known. So these are the public sector banks, and now it changed. Earlier there is 27 public sector banks are there, but now it's changed, reduced. So these are the non-scheduled banks. These are not included into the second schedule of RBI. They have following two types. One is foreign banks, second one is the RRBs. These foreign banks follow regulations of both home and host countries, and loan limits are based on the parent bank capital. These are the local level banks. They serve primarily to the rural areas of the India. Post office savings banks, everybody we know that. Non-banking companies. So they have to register under the Companies Act 1956. Now Companies Act 2013 is there. Profitable than banking sector because of the lower costs, and they can offer the cheaper loans, and they do not accept the public deposits. For some examples also there, hire purchase companies, loan companies or investment companies. Cooperative banks, in the part of the unit number 2 we already learned about the cooperative banks. And now we are going to observe about the unorganized sector. It is entire opposite to the organized sector and is not well organized, and there is no functions as per the defined rules as per the regulations. There is no control by RBI, and it operates based on the old or existing rules and traditions. So the unorganized sector have two types. One is the indigenous bankers, second one is the money lenders. So there are the indigenous bankers means they are the private funds and they can receive the deposits as well as the money lending. And it combines the banking with trading activities, and it lent to the small traders and rural people against the security of land as well as jewelries. Whereas the money lenders mostly deals in the rural financing, and it money lenders also there are two types. One is a professional, second one is a non-professional. Mostly they are considered as a non-professional, and this actual basis is not based on the banking, and they are going to charge very high interest rates. In the villages, we are going to observe about this type of money lenders. So, what are the constraints of money market? One is the supply of funds comes under organized sector and unorganized sector, whereas there is the demand of the funds like borrowers of short-term funds like central government or state government or local bodies. So, what are the sub-markets of the organized sector? So, this is the entire we are going to learn in the other part of the unit number 3. Call money market, treasury bear market, commercial bill market, collateral loan markets, and commercial paper markets, as well as certificate of deposits. So just I give the small information which related to these all call money, treasury bill, commercial bill, collateral, commercial paper, as well as the certificate of deposits. Once completion of this slide, we are going to know each and every aspect or concept in detailed manner. Call money market, which includes the its demand side, is banks with temporary deficit of the funds, and supply side banks with temporary excess of funds. Treasury bill market. It is the short-term borrowings of the government, and market where treasury bills are bought and sold, and there is a high degree of liquidity. And now there is a three types of treasury bills are there: 91-day treasury bill, 182-day treasury bill, as well as 364 treasury bill. These are the examples of the foreign treasury bills. So commercial bill market. Once buyer signifies its acceptance to it become a layer document, written instrument or unconditional order. So it is short term as well as negotiable as well as self-liquidating with low risk, and it have promise to pay. These are bills of exchange. The part of the legal and business environment, we are going to learn about the promissory note, bills of exchange, like collateral loan market. It is advanced by the commercial banks and advanced to the private parties, advanced, not the loan. And borrowers are generally dealers in stocks and shares. The small banks can borrow from large banks, and it may be returned in the few months. And these are backed by the securities. Certificate of deposit. It is a time deposit which offered to the customers by the banks. It is a negotiable instrument, and the financial institutions can issue them for specific time period, and it gives a higher return than bank term deposits, and is rated by approved rating agencies. And another one is commercial paper markets. The security sold by large banks to get money to meet short-term debt obligations. It is usually sold at a discount from face value. It is issued in a denomination based on the 5x. The interest rates fluctuate with the market conditions but are typically lower than the bank rates. The companies sell here commercial papers and these people go to purchase. So what are the underdeveloped money market conditions in India? So the banking system still in the developed phase manner, and there is an irregular supply of short-term assets, varying of interest rates, and absence of developed commercial bill markets, and lack of coordination between the different type of sectors. What are the differences of the money market? The predominance of ordinary sector, diversity of interest rates, inadequate banking facilities across the country, shortage of the capitals, still there, seasonal shortage of funds. And what are the measures we are going to take to improve the money market in India? We have to development of the instruments, deregulation of interest rates, control transactions, and expanding the banking facilities as well as discounting and rediscounting facilities. Thank you.